can help me understand what's going on here. I mean, I'm sitting in a parking lot right now. There is a line of probably 15 cars waiting to go through this popular coffee shop's drive-through and overspend on painfully expensive and inflated products, right? And I'm about to do the same thing, and I'm even going to use my credit card to pay for it, but that's because I can pay my credit card off in full every month. I am extremely concerned about where we're heading because Americans are flat out drowning in debt. And my question to you is, do you think enough people are adjusting their lifestyle to make up for the lack of affordability? And I want to talk a little bit about that with you today to just give you some words of caution, send you to some resources that can help you if you have non-mortgage related debts, just to give you a bit of forewarning that what's going to happen next could be devastating to many, many U.S. households. And what was recently highlighted in a Wall Street Journal article is that life is getting more and more difficult for Americans that are struggling to keep up with their debts. According to a report from the Federal Reserve Bank of New York, the share of debt balances that became at least 90 days delinquent has risen to 1.08% from 0.71%. That's about a 50% increase from this same time last year. Car payments, credit card bills, mortgages, they're all becoming increasingly difficult for many Americans to manage. I want to welcome you to the VIP Financial Education YouTube channel. If you've never been here before, we're here to help you go further, faster financially, and that includes tackling these suffocating debts. If you're sick and tired of your banks sucking you dry, make sure you like this video and subscribe to the channel because we share many proactive ways, step by step, how you can attack and pay off debts quickly. And it'll help you avoid those really expensive financing costs that are involved with your mortgage and non-mortgage related loans. I'm going to put some links in the description for you in order to make it easier to find some of our more popular videos, and those will show you how you can take control of your finances and your debts. Now, according to recent data, 4.57% of consumers' credit card debt has transitioned to 90 plus days delinquent in the last quarter. That means they haven't made a payment in over 90 days. That's a significant increase from 3.04% in the first quarter of 2022. The transition rate for auto loan debt also rose from 1.61% to 2.33%, while mortgage debt increased from 0.34% to 0.59% compared to this time last year. Now, what's most concerning here is that the age group most affected by rising delinquencies across all debt categories is 18 years old to 29 years old. And this is alarming, especially since millions of borrowers in this age range are currently not required to pay their federal loan due to a government-ordered freeze. Now, these increases in delinquencies are occurring while student loan payments are still paused. This is according to Aaron Klein. He's a senior fellow at Brookings Institution. He said, when student loan payments resume, one can expect delinquencies to also rise, not just in student loans, but in other types of debt categories also. As of early 2023, there have been increases in delinquencies compared to early 2022, and this could be attributed to the fading of certain factors that aided borrowers during the pandemic. The government's pandemic stimulus obviously played a significant role in helping people meet their financial obligations. And while the decline in interest rates during that time also prompted many homeowners to refinance their mortgages. But here's the thing, between Q2 of 2020 and the end of 2021, approximately 14 million mortgages were refinanced. That's per the New York Fed. And homeowners who engaged in cash out refinances took an average of $82,000 from their home equity. That was used for what? Who knows? Probably paying off old bad debts. Now, those who opted to refinance their rates lowered their monthly payments by around $220 on average, which is great. That's a great way to increase cash flow. Now, despite the less favorable economic outlook in some areas, very important areas like debt and inflation concerns and so forth, there are other indicators that suggest strength. For instance, the labor market remains robust. That means you can get out there and make money. Retail sales, encompassing spending at restaurants and shops, actually rose by a seasonally adjusted 0.4% in April. Make sure you stay tuned for further updates, guys, because we do want to monitor this very closely. I see very dangerous cracks beginning to be exposed. They've been getting exposed for a long time. Let's face it. We've been sucking the tit, as they like to say, sucking the teat of this amazing economy for so long since the last Great Recession. And I think because we cannot control our lifestyle spending, we like to go to these places in spite of not necessarily having the money to afford it. It's going to be tough if people aren't willing to change their lifestyle in order to meet their budgetary needs. And that's why it's extremely important to manage yourself a budget, folks. Start with a budget, understand what you can afford, and stay in that budget. It is not that difficult to do. And the beauty is you can enjoy all of these things at home for a fraction of the price. I hope you're doing that. I hope you're watching the rest of the videos on this channel to make sure that you're held accountable to the best possible cash flow maximization strategies you can. We look forward to seeing you on the next video. Until then, make it a great day and keep on cash flowing. Take care.